What's going on, everybody? Welcome back to the channel. Listen, I need you to stop scrolling right now because what I'm about to tell you could literally change how you think about your money in 2026. International silver spot prices are trading near $93.41 per ounce today, and the precious metal remains in a strong multi-month uptrend, having risen nearly 195% over the past year. Let me say that again, 195% in 12 months. That's not a meme stock. That's not some crypto token with a dog on it. That is a physical metal that humans have used as money for 5,000 years. And right next to it, gold is sitting at $5,372 per ounce today, with a trading range between 5,215 and 5,409. Now, if you're watching this and you don't understand why this is happening, don't worry. That's exactly what this video is for. I'm going to break down the 5 massive forces crashing into each other right now that are driving precious metals to levels we've never seen before, and what it means for your wallet, your savings, and the US economy going into the rest of 2026. Let's get into it. Okay, let's start with the elephant in the room. Or maybe I should say the missile in the room. Military strikes involving the US, Israel, and Iran have triggered intense buying into safe haven assets. The market is experiencing significant volatility. Prices spiked by over 2.5% in just the last 24 hours following military escalations involving the US, Israel, and Iran. Renewed geopolitical tensions from US-Israel-Iran strikes have pushed investors toward bullion as a hedge against uncertainty. Traditional safe haven assets are seeing unprecedented inflows as geopolitical risks overshadow other market considerations. Although gold outperformed most commodities in 2025, it actually underperformed fellow precious metals silver and platinum, which gained 143% and 137%, respectively. Looking ahead, the outlook for gold remains bullish, with prices expected to push toward $5,000 per ounce by the fourth quarter of 2026, with $6,000 per ounce a possibility longer term. With the Fed expected to cut rates 2 or 3 times this year, and U.S. military strikes on Iran looking increasingly likely, analysts at SocGen say the $6,000 level could look conservative in hindsight, while strategists at UBS argue gains could extend to $7,200 in an upside scenario. The silver market is heading for a 6th consecutive year of structural deficit in 2026, with the shortfall projected at 67 million ounces as industrial consumption continues to outpace mine supply. The cumulative shortfall has reached 820 million ounces, and it takes 7 to 15 years to open new mines to prevent rapid production increases. Silver is in an entrenched structural deficit tied to a multi-year mine supply shortfall that can't keep up with both rising industrial use and strong investment demand. Above-ground silver stocks are running dry, with silver mine production decreasing over the past decade, especially in silver mining hubs of Central and South America. About 75% of silver is mined as a byproduct of other metals. Mexico, the world's largest silver producer, is also unlikely to deliver any significant increase in silver volumes this year due to declining ore grades and partial cessation of operations. Total global silver supply is forecast to increase by 1.5% in 2026, reaching a decade high of 1.05 billion ounces. Silver mine production is expected to increase by 1% to 820 million ounces. China has reclassified silver as a strategic material, restricting exports, which has fragmented the global market and exacerbated supply shortages. The Silver Institute highlighted strong structural growth in data centers, artificial intelligence infrastructure, and the automotive sector, because silver conducts electricity better than almost any other metal. According to Bloomberg NEF, silver demand from PV installations is expected to fall to roughly 194 million ounces this year, marking a 7% year-on-year decline, even as global solar capacity continues to expand by around 15%. Silver now accounts for an estimated 17 to 29% of PV module costs per watt, up sharply from just 3% in 2023. The automotive industry is expected to account for 59% of industrial silver demand share by 2031. Silver demand will likely remain robust in the computing sector as companies continue to build data centers and other AI-related technologies. Physical investment is forecast to rise by 20% to a 3-year high of 227 million ounces. J.P. Morgan Global Research sees silver prices averaging $81 per ounce in 2026. Bank of America's head of metals research Michael Widmer maintains his 309 silver price prediction for 2026. The short-term silver price forecast is bullish, with algorithms predicting silver will increase by 7.29% in the next 7 days and reach $100.60 on March 7, 2026. After posting its strongest annual performance since 1979 last year, silver prices continued to set new highs in 2026, breaching the psychologically important $100 level for the first time in January. The market saw euphoria that pushed silver to $110 in January before a sharp correction. Yet even after the correction, the March 2026 silver futures contract remains up more than 25% year-to-date. The Silver Institute noted that the dynamics driving the silver market to record highs that scaled $120 an ounce remain firmly in place, including tight physical supply in London, a volatile geopolitical backdrop, U.S. policy uncertainty, and concerns over the Federal Reserve's independence. Real gross domestic product increased at an annual rate of 1.4% in the fourth quarter of 2025. In the third quarter, real GDP increased 4.4%. As we enter 2026, the economy has continued to grow, and inflation is moving closer to its goal. But beneath the surface, the labor market is fragile. Payroll growth has fallen substantially, and the base for job creation has narrowed. Nearly 90% of net private job creation through November of last year occurred in a single sector, healthcare and social assistance. Job openings have continued to slowly trend lower, and companies are increasingly discussing layoffs and are eager to use AI to reduce labor costs. Goldman Sachs sees the labor market as the most uncertain piece of the 2026 outlook, with a period of jobless growth similar to the early 2000s being a plausible alternative scenario. Goldman Sachs economists warned that while tariff-related inflation has likely peaked, prices are unlikely to meaningfully fall anytime soon. Tariffs added a 0.7% increase in inflation over 10 months, and levies are expected to add another 0.1% in 2026. Data from the Federal Reserve of New York confirmed Americans were bearing the brunt of the tariff impact, with 90% of the levies being passed down to U.S. consumers. The Yale Budget Lab calculated that tariffs will still increase consumer bills by $600 to $800 on average per household. If the labor market continues to weaken and inflation remains above the Fed's 2% target as tariffs trickle down to consumers, the Fed's job becomes more complicated. Markets currently price in roughly 60 basis points of Federal Reserve easing by year-end. Goldman Sachs predicts 2 rate cuts of 25 basis points, one in June and one in September. Silver and platinum have both benefited from interest rate cuts, and they have also indirectly benefited from the elevated gold price. Goldman Sachs forecasts U.S. GDP to expand 2.5% in 2026, versus the consensus estimate of 2.1%. Goldman Sachs has modeled several scenarios, with their base case envisioning GDP growth slowing to roughly 1.5% in 2026 in a tariff-heavy scenario. Affordability will continue to be a top concern for consumers. Labor supply and labor demand appear to be roughly in balance, but hiring rates remain low, while layoff rates are also low. The Silver Institute forecasts bar and coin demand will rise by 20% to a 3-year high of 227 million ounces, as Western investors increase participation. Silver is famously volatile, and while volatility has recently been to the upside, rapid drawdowns remain possible. In 2026, the price of silver has fluctuated greatly. It peaked in January at over $120, then sharply declined before recovering toward current levels. The global economic and geopolitical environment is likely to remain supportive for precious metals prices in 2026. We are living through an extraordinary economic period. Last year, overall economic growth came in at a solid pace, fueled by consumer spending and rising real wages. But the environment was characterized by tariffs, a deteriorating budget trajectory, cost of living concerns, and uncertainty surrounding artificial intelligence. Silver is undergoing a shift in its valuation, moving beyond an industrial commodity to a triple identity asset: industrial, monetary, and strategic. Even with silver at historically elevated prices, it could be years before any balance returns to the market. Thank you for watching.